you are eligible to record the sales. So among this unearned revenue, air traffic liability, 150 is you already earned. So it means you decrease the unearned revenue and you convert that into your sales. So unearned revenue to revenue. So you can also replace it with unearned revenue. Right? You can also write it down, the air traffic liability, but you can also use unearned revenue. This is the more standard one. Understand, guys? Now on July 4th, 2015, remember, this is 2014, and he came back from Los Angeles to Dallas back on January 4. Now rest of the entry would be again. Now that half of the unearned revenue, now you deserve that one, and now you are eligible to record that one. Right? Jordan, Misha, Sipade,
yes,
Min,
understand.
Rone.
Yes.
Right? So this is how you see the unearned revenue is decreased and added to the revenue. So I have pasted illustration here. So what I like is that I would be creating a breakout room, and all you need to do is a group activity. I'm going to be creating 3 groups. Please take a picture and generalize this entry. Okay? Here we go. I'm going to be opening up the breakout room. Here we go. Kindly accept the breakout room activity. Minsu, please join. Minsu, did you join? Okay, I'm going to be resume pausing after the breakout room activity. Okay, guys, welcome back after a breakout room activity. So please send your group work to the WeChat group, and let's do this together. So on 1st of October, we received subscription for whole year, which means this October 2014 to October 1st October 2015, right? So we received 2,400 cash plus 9% of tax. So 2400 multiplied by 1.09, answer would be 2616. So you receive cash 2616. How much is your sales? 2400. And how much is the tax payable? 216. So that sales revenue, you earned that one, you deserved it? No, we don't deserve it. Why? Because we didn't provide the services, or we didn't provide any subscription services yet. So that is why this is unearned revenue. So cash to unearned revenue to sales tax payable 216. On November 15, we remitted the sales tax. So which two accounts are going to be disturbed? Sales tax liability and cash decrease. So cash decrease, credit. Sales tax liability decrease, debit. So sales tax payable to cash, 216, right? And on December 31st, how much revenue you have earned? October 1st, October, November, and December, 3 months. So among this 2400 unearned revenue, you have a right to earn for 3 months. So we divide this 2400 into monthly, multiply it with 3 months. So among this 2400, 600 is earned. So we need to decrease the liability. So unearned revenue is our liability. This is balance sheet item, not the income statement item. So we decrease our liability. Decrease of liability means debit, right? So 600 debit, and our revenue, which is earned, 600. Revenue increase credit, liability decrease debit. So don't go towards the name. Go to the nature. Its nature is liability, unearned. This is not the income statement item. Okay, this is balance sheet item. So this is liability. Liability decrease debit. Guys, understand? Misha, Sipade, Minsu.
No, I don't get the adjustments that we made. Why is it 600 at the end
Okay.
of 31st?
Okay, let's discuss that one. So we received 2400 advance. So you have right to record it as a sale? Misha, do you have the right to record it as a sales?
No, it's unearned.
No. Right? Unless you provide some services equivalent to 2400. But you provide services for 3 months. From 1st of October to 30th of December. 3 months. So you cannot record this 2400 as a complete sales. You can only record 3 months sales to your sales, right? So how much is the per month subscription? For 3 months, you multiply with 3 is 600. So among this 2400, 600 you can claim on 30th of December. On 30th of December, you can claim that this is the sales that I'm going to be recording, and I earned that sales on 30th of December. So you record it. So that is your sales.
Okay, so you basically get rid of the liabilities, right? Because it's earned
Right.
now.
So when you record the sales, sales increase credit, right? And this you created already liability. Liability decrease debit. So how much liability decrease among this 2400? 600 is decreased. So unearned revenue to revenue 600. Right, Misha? So that's why we have this transaction here. So do they understand? Minsu, understand? Junpyo, David, understand?
Yeah, I understood, sir.
Good, good, good.
Sir.
Okay, now answer this question if you understand that one. So when a business receives cash from customers, before earning the revenue, they credit
Unearned revenue.
Arone, Minsu. David,
Yeah, unearned revenue.
It is unearned revenue, just
Yes.
like the task.
It's A.
good, well done. Okay, let's move forward. Okay, now the current portion of long-term debt, which is also the known amount current liability. So what is current portion of long-term debt? So we apply long-term debt and we are retiring loan on yearly basis. So this year I am retiring this much amount. So I know that from the long-term debt, this much portion I am paying back this year. So this is called current maturity or current installment as well. So a long-term debt offered paying in installment, which is amount of principal payable within 1 year. So company reclassifies amount from long-term to current account. For example, you took a loan of 1 million and you said that you are going to retire in 5 years. I'm just excluding the part of